Gold prices are little changed on Tuesday morning as most traders are looking forward to Fed minutes, Fed meeting, and of course, jobs on Friday. Here to talk about it is Paul Sachs. Paul, thanks so much for being with us. What are you seeing today in the trade?
Okay, well, it is summer and it is slow. We are range bound. 1300 did act as a resistance level for quite a while. Once we got above it, we found massive producer selling from 1300 up to 1350. So we really are quite range bound now. Everyone is waiting for the next sort of exogenous shock to the gold market to either break 1350 or go back below this now 1300 to 1315 support level.
Interesting. So can you tell us a little bit about the producer selling?
Yeah, I mean, the mines are in trouble. I mean, they in the past year did not sell or hedge as much as they should have when we are at much higher prices. So since we now bounced off 1180, about $150, $170 that is, they really are now in a position where they have to hedge something here in order to stay in business, make payroll.
Paul, are you concerned, or do you think that we might see any surprises out of the Fed tomorrow?
Well, we're all Fed watchers now. I mean, these have become sort of extraordinarily interesting and very binary events. You know, whenever there's a data point or a Fed announcement, you know, will the language speak to tapering, or will the guidance be very emphasizing accommodation, so to speak? I'm not expecting any surprises. I mean, I think Bernanke has to be sort of very transparent. He's working on his legacy here. There aren't many of these left. So we're going to be speaking to most likely a continuation of the $85 billion a month.
And finally, jobs report on Friday. Are the traders really expecting anything out of the jobs report to affect the yellow metal massively?
They are. These monthly, and I want to stress monthly job data points are much more important than weekly, though both seem to be heavily revised. So it is amazing to me how much we key on them. But we really will most likely see quite a reaction, because that's the whole economy, and the recovery to come is going to be based on the consumer and their level of income.
All right, Paul, thanks so much.
Thanks for having me.
You heard Paul. They're keeping an eye on the Fed, but also keep an eye on those revisions of previous monthly jobs reports. For TheStreet, I'm Deaux.